Breakout or fake out? I don't know if we can tell yet. If you follow Stackers, then you know that I've done a number of bearish videos recently, and this all is based on the indicators, and it looked like we were going to go to sub 18 and sub 1700 for gold. And yesterday we saw the Fed increase rates by 75 basis points, and by the reaction of the markets, the increase was already priced in, and they viewed Powell as somewhat being dovish. As the Wall Street Journal wrote, markets were elated by Chairman Jerome Powell's remarks at his press conference on Wednesday, but it makes us wonder if it wasn't too much of a good thing. Prices soared as if tighter monetary conditions won't last long, and that's troubling as an anti-inflation message. The Federal Open Market Committee 4-paragraph statement after its meeting was hawkish on inflation. The committee is highly attentive to inflation risk. So there seems to be a disconnect that I'm starting to wonder if people heard what they wanted to hear and that we're so desperate for a rally and so desperate to be out of this that any semblance of good news is going to send people running into the markets. I think it's important that we note that the Fed fund rate is only at about 2.5 and 2.25, and inflation was last reported at 9.1%, which means we are still very much in negative territory. Even with that, I get it. Powell referenced that their goal was to reach 3.25 to 3.5, and folks took that as some kind of dovish movement, and they're already wondering if this is the beginning of the Powell pivot. So the question really becomes, is it a Powell pivot, or did people just hear what they really wanted to hear? In another article I found, it was really interesting. It said the markets clearly think the net of today is that the Fed will end up doing less tightening, but it was hard to come away from the Fed press conference thinking the Fed delivered a dovish pivot. Analysts at NatWest Markets said in the note, if anything, based on what we heard today, the median Fed members' view on the path of the Fed funds rate over the remainder of the year could be conceivably higher. So we got some things going on, folks. Another key data point was that today GDP came in and it had fallen 0.2%, and that was after we saw a 0.4 fall in the first quarter. Ultimately, this means we're in a recession. Now, there's gonna be all kinds of arguments and nonsense about it. The generally accepted definition is 2 quarters of negative growth and negative GDP. So we're in a recession. The belief around that, I think, is triggering some movement away from the dollar, and thereby weakening it and giving metals some room to run, which is what metals desperately needed. Remember, we had gotten up to 109 on the dollar index, and from the way things were looking, I was like, 120 couldn't be out of the question here. Moving from the macroeconomics to more technical, let's really talk about what's going on with the prices. We're seeing some interesting behaviors coming out of the bond market, specifically the 30-year and the 10-year. But as I've learned the hard way, y'all ain't really interested in me covering stuff around bonds and the technicals. So instead of the labor pains, I'm just gonna give you the baby. The ratio between the 30 and the 10-year is really highly correlated with the price of gold. And the latest action really looks like it's another indicator that may have turned green in favor of the metals. And then taking a look at the charts, you also see some other positive indicators for gold. Specifically, it's just moved above its 20-day moving average. And then some other positives when you look at the MACD, the RSI, and even if you get really into it and look at the Fibonacci retracement levels, it seems like this 1756 is going to be a critical level where you would want to see gold close and remain above for a couple of days, I think. And gold is doing its best to break out, but we're going to ultimately have to see what that means. So what's the move here? Well, obviously, you got to do what you think is the best move for you. And while I don't believe metals are out of the danger zone, I have a greater tendency to trust gold's activity far more than I trust silver. So even though I don't trust this breakout, we have had a $50 movement, and I have to account for the reality that I could be wrong, in fact. So I decided today that I was gonna make a purchase. Nothing huge, 1/4 ounce, maybe a 1/2 ounce, just to lock in a little bit more metals at a lower price. So what did I buy? 1 ounce Britannia in 2022. Totally not my plan. But let me explain why. There's a couple of good points that come out of this. What pushed me over the edge was that I could get that full ounce Britannia for a 1.88% premium. Yep, you heard me, $33.22 over spot, or a 1.8% premium. This is why I keep telling y'all, to always start at findbullionsprice.com. And matter of fact, someone needs to send a message to them and tell them how much I hype them up and see if they sponsor a video or something. Anyway, you never know what you're gonna find. And so I have been perusing and looking around for a little while, but I haven't been working too hard. And if I wouldn't have checked this site, I would have never seen this deal from Universal Coin. This is how you get good deals, folks. You gotta keep looking, you gotta keep scouring. $33 over spot premium is just phenomenal. So back to the markets. Ultimately, I think we're facing kind of a coin flip situation in regards to prices going up or down. My strategy at this moment is to kind of lock in a little bit more because I kind of feel like I've played chicken with the market as long as I can. Now, here's the good news for you folks. I am like kryptonite to gold prices, which means since I bought today, I am almost guaranteeing that prices will go down on Monday. So you're welcome in advance. All jokes aside, I think it's too early to call this a breakout or a fake out, but you do have to be prepared to act because if this latest activity seems to have some legs, it's going to take off. There will be some kind of pullback because that's typically how markets behave. And so if we start to see this really have some legs, then this is truly one of those buy the dip situations. But if we start to see some weakness for unexplained reasons, be careful. There may be some pulling back here and people taking profits. And the bottom could fall out and we could hit the 1600s. Right now, it's just hard to tell, like I said. So keep watching those indicators, keep listening to the market and all the fundamentals. And as long as the fundamentals behind our position, our thesis are intact, you gotta just trust your assessment. But you also have to put a hedge in every now and then just in case, because while you may be 80, 90% certain, there's still some uncertainty there. I wanna hear what you think. Do you think this is a breakout or a fake out? Is there a particular indicator that you're going to watch in terms of prices? Should we adjust our strategy now? And if so, how should we be adjusting our strategy? In terms of silver and gold, which do you think will perform better throughout the end of the year? Thank you for seeing this video all the way through. You know that makes you my A+ students. Always stack smarter and never stop learning.